Good morning. Welcome to CurrencyChange Daily Markets Update on Monday, the 4th of November 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, your local solution for your international payments. In the US, the dollar index has rallied over the past week, in part due to the weaker euro, and some guess that there might be a rate cut this week. And after the Federal Open Market Committee on the 30th of October declared that underlying strengths in the US economy, even as it maintained its $85 billion monthly bond buying to spur growth, called quantitative easing. The US dollar has shown some resilience to weak US data while responding positively to stronger data at the end of last week. The US government shutdown has impacted significantly Q4 growth, and economic confidence and economic activity are likely to remain subdued ahead of US budget talks in January, which suggests, as we've been saying for months, QE tapering looks unlikely until next year, and the question is when. It is a heavy data we're going to have this week from the US with services ISM, Q3 GDP, and October's payroll report. The economy in the US probably showed in the third quarter an improvement, and employers hired fewer workers in October, indicating the US expansion is kind of losing momentum even before the partial government shutdown. Economists project these sort of things for this week. A drop in government output and the restrained business and consumer purchases due to the 16-day shutdown that we've had last month of October have prompted economists to trim significantly their fourth quarter growth forecasts. The dollar strengthened after the Federal Open Committee, as I said, and the key question is really when during the year we will start to see the tapering if it happens. The purchases of bonds tend to generally debase the dollar, and the question is how the market will react to when it will stop doing QE. In Europe, the euro underperformance looks set to continue in the run-up to Thursday's ECB meeting, which is a key event for this week. Last week, the October CPI flash estimate inflation came in much weaker than expected, which prompted the market to price in the risk of further monetary easing from the ECB, with a number of market economists calling for a rate cut as soon as possible, even as of this week or in December. ECB's Constancio and Amundsen speak this morning. Their comments are likely to be closely watched by the market for any indication on how the ECB is surely likely to act on that. The euro touched its lowest level in more than 6 weeks before the ECB Executive Board member George Amundsen speaks in the run-up to a policy meeting amid signs further stimulus may be needed in the region. Europe's common currency maintained its biggest weekly drop that we've seen since July 2012 before the Mario Draghi-led ECB meets on this Thursday, and economists mostly say they will keep interest rate at 0.5%, but some start to guess there would be a rate cut, and we wouldn't be surprised by that. In the UK, sterling dollar came under pressure on Friday, weighed further by some better than expected US statistics. While respective fundamentals suggest we should see sterling dollar going higher, relative rate spreads, interest rate spread, have moved in favor of the US dollar over the last week. Some relatively firm US data and the Fed sounding less dovish than the market had anticipated at the FOMC has seen US yield moving significantly higher, something to monitor. While UK data out this week will be important for sterling, unless we get stronger than expected data, it will be difficult to trigger further sterling dollar gains. US dollar sentiment and US data surely will be the main driver for this week. The pound held a 3-day gain versus the euro before an industry report that economists said will show UK construction output slowed in October. The Confederation of British Industry raised its forecast for UK economic growth and said it expects business investment and trade to aid the recovery starting next year. The business lobby sees the economy expanding 1.4% this year and potentially 2.4% next year. It said in a quarterly report. There's also a very good article in the Daily Telegraph of today saying that UK might be the best economy in the West for next year. The CBI will hold its annual conference in London today, and it also declared that unemployment, which the Bank of England has set as a key indicator for its guidance on policy, should fall below 7.2% by the end of 2015 from its current level, which is at the moment 7.7%. In terms of live exchange rates that you can trade now, sterling dollar 159.43, sterling euro 118.02, sterling Australian dollar 167.83, sterling New Zealand dollar 192.09. The economic agenda for today, UK time, will have at 9 o'clock Euro market manufacturing PMI leading index, expected at 51.3. For UK at 9:30, the PMI construction expected at 58.9, and at 3 o'clock, the US dollar factory orders expected at 1.8%. If you require further information, please visit now CurrencyChange.com or contact us on +44 0207 373 2686. Have a great week.